Hello, everybody. Today we're going to start chapter 3 in our accounting book. And this lesson deals with lesson 3.1 in introducing the idea of a multi-column journal. So just a couple of looks at the targets that we're going to hit today. I'm going to talk about what a journal is and explain why it's used to record transactions, comparing and contrasting different types of source documents, which we'll talk about, and then looking at the 4 parts of a journal entry. And then your assignment is going to be making 2 entries for the end of lesson review for 3.1. So in chapter 2, we looked at analyzing transactions into debit and credit parts. We used T accounts and the accounting equation to do that. This is a good way to learn the basic principles of accounting that we are going to continue to learn throughout the rest of the course, that you would use pretty much in any accounting class that you would take. But using this method of using T accounts in the accounting equation is going to get too long and cumbersome to actually make recording transactions possible for a business. Looking at a business that has a chart of accounts that is pretty long, that accounting equation is going to look crazy with all different types of T accounts and accounting equations. So in accounting, we use journals. And now today, most of the time, this is just always in electronic software, something, like QuickBooks or Great Plains or something like that. There's all different types of accounting software that accountants use to make journal entries, which is what we're going to do today. So we're going to introduce this idea of a journal, and then we're going to talk about journalizing or making these entries. And in business, usually businesses conduct business every single day. So we should journalize every single day and make those entries and record as we go. This is a look at a journal. There are different types of journals. And businesses select the ones that work best for them. Today, for the rest of this chapter, actually, we are going to use a multi-column journal, which looks just like this. There are some things here, and we're going to highlight the 4 main parts, but those are the date, the source documents, which we'll talk about in a second, and then our debits and the credits. We have general columns here for debits and credits, and then a lot of times businesses that conduct business they use multiple column, or they use different account types a lot, like cash in sales, would include a special amount column for each of those things so that they don't have to write those things on the account title line. So this will be a little bit better once we actually illustrate these ideas. But for right now, just know that this is kind of what the journal looks like. It might look a little different business to business, but this is a multi-column journal. Multi-column journals ensure accuracy. They are recorded chronologically, which means the entries are organized by date. And then this idea of double entry accounting, which is really what you guys were practicing in chapter 2, is that when you make an entry, when you record a transaction in a journal, it's called an entry. And then when you include the debit and the credit parts of each transaction, it's called double entry accounting, which just means each transaction includes a debit and a credit. Debits must always equal credits, and that helps us ensure that our accounting equation stays equal on both sides. So you're definitely going to be using those concepts you learned in chapter 2, carrying things over as we go along here. So let's talk real quick about source documents. In chapter 2, you guys were provided with a description of the transaction. So like received cash as an investment from the owner, paid cash for supplies to, so-and-so. This is not, a traditionally, common practice in accounting. You don't get a list of different transactions. An accountant would receive source documents. They would receive checks, invoices, other types of, records that indicate what the business activity was, and it's up to the accountant to analyze that and to interpret those things. So that's what we're going to be doing as we go forward here, and there's going to be a spot in our journal to record where that source document was. So some different types of source documents might be like a check. In this case, it's Delgado Web Services writes a check to Eastside Supplies to buy supplies, it's considered cash, right? You're writing a check. A check is just an order for the bank to release funds to Eastside Supplies once they do that. You might also have electronic funds transfers from buying stuff on a credit card, or wire transfers if you're just using an electronic service to send money or something like that too. So ways to record cash transactions. You might have an invoice, which means if Delgado Web Services designs a website for Main Street Services, which is a different business, when it comes time to pay, Delgado Web Services is going to prepare an invoice that looks similar to this and send it to Main Street Services. And then Main Street Services will send cash, or it will be recorded on account as Main Street Services owes Delgado Web Services that $500. Another, just to be a little bit more specific about the invoices, you have sales invoices, is kind of the same thing. Might also be referred to as a sales ticket or a sales slip. A receipt for conducting business. So in this case, if we just even look at this and we look at some of the different components, you can kind of see that it indicates a very similar transaction that we were just working with. And so you'll look around. It was recorded on January 2nd, received from Michael Delgado for an investment of $2,000. So that transaction, if we were just to look at it, would be received cash from the owner as an investment in the amount of $2,000. So again, you don't have a description of that transaction, but you do have a source document that indicates what happened, and we can interpret that. Memos, maybe sometimes Delgado Web Services does do something like buy supplies on account from Canyon Office Supplies, which means they owe Canyon Office Supplies $220 that they'll have to pay at some point. They just recorded a memo from that. Maybe they'll get an invoice from them, and then that would be the source document. But in this case, if you look down here, that just looks very similar to that account transaction. Calculator tapes is something mentioned in the book. This is definitely an older school type thing, but businesses still use a tape. It's like a calculator with a little printer roll, and every time you type numbers onto it, it records the numbers. But it's important then to go back and write some information so that the accountant knows what's going on. It's kind of like a cash register report. So like if any of you are cashiers, or if you've had to, count money at the end of the day of a shift in your cash register, you might have to prepare a cash report to see what sales were, went in, what cash went in, what cash went out and stuff. So let's look at making some transactions, and I'm just going to pull up all the pieces here. We'll do it step by step at this point. So Lesson 3.1 goes through recording a journal, making a journal entry for two different types of transactions. And they're pretty basic ones that you guys have already seen before. But just to bring it all back in, let's go back. So we'll see here on January 2nd, received cash from owner as an investment. That's something you saw in chapters 1 and 2. That's a description of the transaction. Again, as we go forward, you're not going to have that to go on. But for right now, you still will. Chapter 2, this is very similar to chapter 2 over here, cash and Delgado Capital, working with those T accounts. In this case, we had to debit cash. Remember, debit's on the left, credit's on the right. Debit cash for $2,000 because cash went up, and then owner's equity, Michael Delgado Capital account, also went up, so we had to credit that account. That was chapter 2. Chapter 3 now is recording these entries in a multi-column journal. So remember, we said on our learning targets there were 4 different parts to that. The first one is the date. And the date doesn't have to be written in a special type. And so when we actually get to your assignment, you're going to see that you have to write Jan. So for January 2nd, you would write JAN.2. And this is what this looks like in the book. On the MindTap site that you guys are using, it is going to look a little bit different. Same thing, but a little bit different. And there's some things to go through to kind of help you with that. So write the date, January 2nd. We would write Jan.2 over there. Going forward, the second part of a journal is the debits. And so this is just bringing back what you know. And so if you need to still, use your T accounts and what you guys learned from chapter 2 to help sort through this. And as you do this more, you're going to get to the point where you're comfortable and you don't have to draw out these T accounts anymore. But if you need to still right now, please do that. Make sure that you're getting these questions right. So our debit, remember, our cash over here is a special column because Delgado Web Services uses a lot of cash accounts, whether they're receiving cash from sales, from the owner as an investment, whether they're paying cash for different supplies. We're going to have a lot of cash entries. So that's going to help us from having a bunch of different lines there. So it's included in here as a special account column. So this capital or this transaction, in order to record that, our debit is going to be for $2,000 under cash. Okay. Number 3, our credit then is going to be this right here. So we had cash here already, so we don't need to write cash over here. Later, you'll learn about different transactions that don't include cash, and in that case, you would have 2 line entries for each transaction. But on this one, since cash is one of our account titles and it's included in our special accounts, we can make this entry on the same line. So the other account that's impacted is our Michael Delgado capital account. So we're going to, on MindTap, you're going to actually have to type out Michael Delgado, comma, capital. And it's going to be there. I'll show you kind of where to find that. But our credit then, to make Michael Delgado capital go up, we need to credit that for $2,000 as well. Over here, you're going to have 2 numbers. In this case, it's zeros. But if there are cents that are used, if this was like $2,000.57, this cell here would be for 5/7, and then this would also be for 5/7. But general accounting principles, you don't just leave it for 2,000 even. You do 2,000. This would be like where your point would go, your dot, and then 0, 0. The last part is, what is the source document for this? And in this case, this came from receipt number 1. That is our source document right there. And so we're just going to summarize that as R1. So our source document is going to go under document number column R1. Okay, and that's it. That's what we're going to have to write. And so again, I'll kind of show you your assignments on this, but that's what we're working on today, is just these 4 things making a journal entry. So let's look at one more example here. Paying cash for supplies, really similar to something that you guys saw already. But again, right here, January 2nd, paid cash for supplies in the amount of $165. Chapter 2, in order for our T accounts, we'll say what 2 accounts are impacted, supplies and cash. They are both asset accounts, so we know one needs to go up and the other one needs to go down just to keep things equal between the accounting equation. So in this case, when we buy supplies, supplies goes up by 165, so we debit supplies for 165. We need to credit cash because cash is going down because you're paying cash for it. Goes down by 165. And now to just make this account, again, you're going to start with the date. And as you'll notice before, you don't need to write Jan 2 again because these are all recorded in chronological order by date. So only when the month changes, like the first entry for each month, do you need to write the new month on there. So Jan 2, if there's more entries, which there probably will be throughout the month of January, any other subsequent entry is only going to have the number. And then when February hits, like once February 1st comes around, if there's a transaction, then you would write Feb.1. But you don't need to write the month in there, only on the first time of the first transaction of that month. Number 2, what is our debit? So we know that we need to debit supplies to go up. So we're going to write supplies here because that's one of our accounts that are impacted, supplies. And remember, cash is still on our special account, so we don't need to write that in there. But we know that our debit needs to come from supplies, so we're going to write supplies for 165 in 0 cents. Whereas our credit, that is coming in cash, so our 165 credit of cash to make the cash account go down. And 4, the source document is check number 1, so we're just going to abbreviate that as C1 over here. All right, so you guys can